Just a reminder that this content is for education and entertainment purposes. All content in this presentation is of general comment only, which does not take into account your current personal or financial circumstances and is not advice. Please seek advice from a qualified and trusted financial advisor before acting upon any of the information in this presentation.
Hi everybody, Andrew Harrison, Insurance Advisor, here today to talk to you about business insurance. Business insurance for SMEs is generally offered in a package policy. Basically, that suits a lot of the small to medium businesses. However, it's always good to keep in mind that if you're larger, there are parameters and you may fall outside those. General school is that if it's greater than $5 million in property sums insured, it should go onto a standalone policy, or from a liability point of view, if your turnover is greater than 20 million, once again, you should be looking at a standalone policy. If you're within those parameters, then definitely a business insurance package is probably right for you. So the sections of a business package include the property, which protects your building, your contents and stock, your public and products liability, business interruption, and other sections such as glass theft, money, electronic equipment, machinery breakdown, and general property. And today I'm going to talk through these, give a few case studies on exactly how they do respond and how they do protect your business, and hopefully you can walk away at the end with a greater understanding of what you require and the reasons behind it. The first section I would like to talk about is property. The property section protects your building and contents from various events such as fire, impact damage, accidental damage, earthquake, and storm damage. Now, I just want to touch on the point of accidental damage as well. Some policies do not offer accidental damage, and they're more a defined event, which basically means you're only covered for the events that are listed in your policy. Accidental damage is a broader cover, which means anything that's not excluded would be covered under accidental damage. Think practicing your golf swing in your office and your golf club goes through the window. That would be an accidental damage that may not otherwise be covered under a listed events policy. So how does a property claim work? If the worst case scenario happens and you need to make a claim, normally it's a negotiation piece where you can talk with your insurer and come up with the best way to handle the claim. Some of the options include the insurer can pay for the rebuilding and repair of the damaged property. Generally, the process is an assessor will be appointed. They'll come and inspect the loss, and then they can help arrange and manage any tradespeople that come in and have to get that property back to the situation you were in prior to the claim. The other option you may be able to negotiate is a cash settlement with the insurer. This is very beneficial in case you're thinking of doing some renovations or changing an office layout. You might be able to take that money, put some more of your own with it, and upgrade your facilities. And of course, in regards to contents or stock, the insurance generally replaces those with the same or similar items. Now, at this point, I'd just also like to stress out that specific coverage does depend on each individual insurer. So as always, it's very important to check your product disclosure statement so you can see exactly what's covered. And if you have any questions, always ask your insurer or your insurance broker. So what affects the cost of property insurance? Generally, insurers talk about rating factors, and this is just the pieces of information they use to come up with the premium. Some of the standard ones are the construction type. Obviously, if you've in a wood building, it's going to cost more to insure than a brick or concrete building. This is a likelihood that once a fire starts, it could move to all corners of the building and more likelihood of a total loss. Also, if there any asbestos present, basically with asbestos, if you have a partial loss, the costs associated with removing that asbestos with specialised tradespeople to do that are greater. So as a result, the premium costs more because the insurer is likely to suffer a higher loss. Other rating factors such as fire protection, smoke alarms, fire extinguishers. If the building's got 100% full coverage of sprinklers, then the likelihood of the premium being lower is high. Also, the most obvious one, sums insured. The higher the sum insured, the more it's going to cost you to insure that property. I'd just like to give a case study now on how the property insurance plays out in a real life example. And in this particular one, it's a fire in a neighbouring premises. So it wasn't even a loss that happened on the insured's premises. So this business was renting a shop front in a shopping centre, and they had contents. Obviously, they didn't need building insurance because that was covered by their landlord, but they still had to protect their property within that. An arson attack occurred about 3 or 4 shops down in the shopping centre. And although there was no fire damage in the insured's premises, smoke, soot and debris infiltrated the insured's premises, causing almost $20,000 in damage to air conditioners, specialist medical equipment and general office equipment. Now, once again, as I said earlier, when that claim come in, assessor was appointed. That assessor attended the premises, noted that all the ducts in the air conditioning needed to be cleaned, not just once, but probably again in 2 to 4 weeks' time to make sure that all the damage and soot was removed, and also assessed that the film that the soot left behind was enough to ruin even simple office equipment like desks. So that's just a case of how your property insurance can respond. The next section of the business pack policy we'll look at is public and products liability. The public liability insurance covers the cost of claims made by members of the public for incidents that occur, in connection with your business activities. So basically, in any business, we do have interaction with the public, and it can be as simple as you putting a bag down or a laptop bag or a piece of equipment and someone trips over it. And if they suffer a loss on the back of that, then that's when the public liability policy will respond. So in order for it to respond, someone has to suffer a financial loss, a personal injury, or a loss of damage to property. So basically, if that occurs, then generally the public liability policy should respond. It's also important to realise that the public liability wording is a broad form wording, which basically means everything is covered unless it's excluded. Because as you could imagine, it'd be very difficult to put every type of situation into a policy wording. So that way, unless it's excluded, it's generally included under a broad form public liability wording. And so when insurers look at public liability and what they use to determine what the premium will be, generally it's the turnover. So the higher the turnover, the more interactions you have with the public in the eyes of the insurer, and also what type of policies and procedures you have in place to mitigate any risks. So a case study for public and products liability would be an imported product exclusion case study. And this is an important one, and it just shows how you should really look at what's covered under the wording and also what is excluded under the wording. So a prospective client contacted us to source a public and products insurance for a business he had just purchased, and that business was the sale of online electric scooters. The scooters were sourced from China and imported into Australia. So at face value, a really simple transaction. But obviously once the insurers get involved and they all have different risk appetites, the risk became problematic to place as some insurers didn't like it. In fact, 16 insurers were approached for a quote, and of those 16, 15 of those insurers declined to offer terms. And the only insurer that did offer terms provided a quote at $45,000. And this was way above what the prospective client was willing to pay. At this stage, the prospective client became a bit agitated that we couldn't source an insurance quote for him, because he was advising that the vendor who was selling the business had only paid $3,500 through a direct-to-market insurer for their insurance the previous year. So we were more than happy to look at that insurance. So we undertook a review of the insurance that was in place, where it was discovered the current policy had an imported products exclusion. So basically that had made the current policy that the vendor had absolutely worthless, because any claim that stemmed from an imported product would not be covered. So basically that person was paying $3,500 a year for no coverage whatsoever. And that's just a really good example of how you need to look at the nitty gritty of all the insurance policies and make sure you understand not only what you are covered for, but also what you're not. The next section we're going to move on and talk about is business interruption. So business interruption covers you for loss of income during a period where you can't carry on business. And this is normally triggered at the same time as a property claim. Best example of that is if your business burns down due to fire and you can't trade, that would trigger the business interruption section as well if you've taken out that section. So the goal of business interruption insurance is to put you back into the same position you were pre-claim. So, once again, if a fire burns your business down, that business interruption will keep your revenue, will replace your revenue, going until the time comes where you can be back up and trading and there's no longer a need for it. And that's an important consideration to make, because within business interruption, they have what they call indemnity periods. And these can be as short as 3 months, 6 months, 12 months, even 24 months. And that's the length of time that the insurer will continue to pay and substitute for your revenue. So if you're a manufacturing business and you have some specialist manufacturing equipment, it's a great idea to have your indemnity period longer than shorter. Compare that to an accountant who would only require their business to get some additional computers, desk, maybe some other office space. 3 months might be more than sufficient to be up and running again. So the type of business definitely plays into how long your indemnity period should be. So a case study for the business interruption insurance I'd like to use today is a potato chip manufacturer, and they suffered equipment fire. So once again, their contents were damaged by fire. So that obviously, once again, was a claim under their property. But what happened in that, their vat for manufacturing all these chips caught fire and was destroyed. Now, this particular one, 8 tons of chips were produced each week by this machine. And because it was a piece of specialty machinery, the time elapsed from when the claim was lodged and a new machine was ordered to delivery, and when it was back up and running again was 6 months. Now, this business was 100% reliable on this machine to generate their revenue and income, and throughout that 6 months they had their business interruption insurance in place to make sure that they could still trade, still pay their staff's wages, and still service any debts that they currently had. The other sections of a business pack policy are quite self-explanatory. We've already spoken about the property, public and products liability, and business interruption sections. There are other sections of the business pack policy that you can take out. Glass is one of those sections, and quite obviously covers the breakage of glass and any signage at the business premises. There's a theft section as well. Obviously, if any breaking and entering by a member of the public and steals equipment, stock, anything like that, that can be covered under a business pack as well. Money, once again, it can cover money in the till during business hours, money in a locked safe, money that you take home to the bank and on the way to the bank as well. And it can also cover any money that's kept on your business premises outside of standards hours. Another section is general property, and this is very, very relevant for tradespeople that carry a lot of expensive tools. So general property basically covers portable equipment that you need to do your job. As I said, tradespeople could have expensive tools they need on the job, or a lot of businesses have laptops for traveling sales force. So general property is a section that you could take out to protect your property in those situations. The last 2 sections I want to speak about from a business pack policy is the machinery breakdown and electronic equipment. So the machinery breakdown provides cover for all kinds of plant and equipment used across many industries. So especially in manufacturing, businesses are really reliant on their machines. So machinery breakdown covers the cost of repairs and replacement of damaged parts of those machines. So this differs slightly from a property cover, where if it's an external loss such as a fire or impact damage that affects the machine, that would be a claim under the property section of the business policy. The machinery breakdown normally stems from internal malfunctions of the machine, a shorting of a wire that renders the machine useless, or any damage to any of the machine parts of it. Within the machinery breakdown policy, you can also claim for additional losses such as deterioration in stock. If a refrigeration, which can be covered under machinery breakdown, malfunctions, a lot of stock can get lost as well. So there is that possibility of insuring the stock that you keep refrigerated. Also covers things like business interruption. So if you're relying on a machine, you can protect your revenue under a machinery breakdown as well. Temporary hire, getting an alternative machine in to keep your business ticking over whilst that machine is getting repaired or replaced. And also professional fees and expediting expenses, which basically means any additional costs that it takes to get that equipment there quicker, whether you want to ship it in by air as opposed to rail, and the professional fees are just using professional services, loss assessors, etc., to determine exactly what the loss was. Electronic equipment is very similar, but the difference is each insurer might define it slightly different. So it's very important to understand what equipment you have and whether it would fit the definition of electronic equipment or the definition of machinery breakdown. I know from my point of view, I've had MRI machines, which some insurers define as electronic equipment because it fits under their medical equipment definition, and some insurers fit it under machinery breakdown. So that's just an example of how different insurers define things differently. So it's important just to understand where exactly your machines fit in. So once again, under the electronic equipment section, it covers the repair or replacement of the equipment as a result of material damage. And once again, that damage needs to stem from an internal source, not like a fire or anything. With electronic equipment, there's also loss and restoration of data. So that includes data stored on the equipment that may have been lost, and also the increased cost of working as a result of damage to the equipment. And that increased cost might be, once again, renting that equipment again, whether it be a telecommunication system or computer system, just to make sure that your business can continue to run or be up and running again as quick as possible. There leads us to the end. I hope you got a lot out of it. And if you need any questions, please feel free to contact us at Cutcher Neale and I'm at Insurance. But once again, please remember that all insurers are different, and speak to each individual insurer. Have a good read of that product disclosure statement so you can understand and see exactly what's covered. And if you don't understand, just ask a question, because there are many people out there that will be in a position to help you. Thank you.
Just a reminder that this content is for education and entertainment purposes. All content in this presentation is of general comment only, which does not take into account your current personal or financial circumstances, and is not advice. Please seek advice from a qualified and trusted financial advisor before acting upon any of the information in this presentation.